Hey everybody, morning. How's it going? Looks like we got a full crowd this morning. Patrick, David, Harry, I don't even know how to say it. Wrongimer. George, Michael, Arturo, Craig, Giovanni, Maurizio, David, Dan, Larry, Donald. Hey everybody. Glad to have you. Whew, this week, buckle up. 48% of the S&P 500, as far as market cap goes, are reporting earnings this week. That's over 165 S&P 500 companies. Some of the top ones. We got Microsoft coming up today after the close. So you may want to make sure you're subscribed. Make sure you hit the bell for notifications when I go live, because I'm going to go live. And Microsoft and Google are reporting tonight, along with Visa, Teladoc, and Texas Instruments, a whole slew of other companies. And I'll be live while that all happens during 30 Minutes of Awesome tonight at 5 p.m. Eastern. In fact, some of those earnings may come out before I go live, so you want to make sure you come. And you know what the thing about 30 Minutes of Awesome is? Lately, it's been longer than an hour, and I take your requests for that at least 30 minutes. So I'll talk about what's moving, and then you get to make requests for 30 minutes at least. Hey, Kimberly, my lovely wife. Anniversary coming up this weekend. We've been married for 20 years, everybody. So anyway, glad to have her in the stream today. So we've got all that. Plus, the FOMC meeting starts today, wraps up tomorrow afternoon, about 2 o'clock. And then Jerome Powell cannot resist speaking at 2:30. He's gonna go live and do a speech, and we'll see what happens. Are they gonna raise the rate like everybody thinks? I mean, that's what the market's got the odds on, raising rate. If they do anything crazy, watch out. Now, U.S. Core PCE coming out on Friday. That's Powell's favorite number, so they're gonna do their rate raise thing, and then they're gonna find out their number. And did they do the right thing? Did they do the wrong thing? I don't know. We'll see. This can be a crazy week. So let's go ahead and do a disclaimer, and then we'll get rocking and rolling here. All right. All trading involves a substantial risk of loss. Remember, one you can afford to lose. Past performance not necessarily indicative of future results. So I may be full of crap. I may never get another one of these right again. This presentation is intended to be informational, educational, and fun. Is not a recommendation to buy or sell anything. Period. Don't buy anything from me. Don't buy anything from anybody else. Don't buy any financial assets. Don't buy any financial instruments. Don't buy crypto. Don't buy stocks. Don't buy options. Don't buy anything. All right, that's the safest thing to do, because there is substantial risk of loss, as we said in the first sentence there. Please be careful. You can lose money doing this. If you desire personal financial advice, hire a consultant financial advisor. I hope that you all understand, there's risk in this. Luckily, I try to be on the right side. I mean, I may never get anything right again, but I get them right more than I get them wrong. So thanks for coming. Thank you for watching, and keep coming back for more. Anyway, so this week already, we had a whole slew of international stuff yesterday, Monday. I mean, we had the French PMI, German PMI, flash manufacturing PMI in Europe, Great Britain, UK flash manufacturing PMI, and lots of PMI, and then even the US had their manufacturing PMI. So we had all that coming out yesterday. Most of it was red. Only see a little green in the U.S. Yeah, right. Green in the U.S. I don't think so. Do you think so? I think they were full of crap. I think they're cooking the numbers. Anyway, consumer confidence coming out at 10 after the market's open. We're seeing some more international news. Then, of course, we've got the FOMC tomorrow. Big news, 2 o'clock Eastern time. Set your alarm on your phone for 1:30. Make sure that you're protected, whatever that might be. If you need to close positions ahead of that, make sure you know what time it is. All right, please be careful. Then on Thursday, we've got advanced GDP, unemployment claims, whole slew of more stuff here. durable goods, and all this sort of stuff. Advanced price index for GDP. Then on Friday, like I said, Powell's favorite number, PCE right there, and employment cost index, and then revised consumer sentiment after the market's open. So it is a week of crazy numbers, and this isn't even it. I mean, like, there's a lot of stuff on here, a lot of red stuff on here. BOJ, Bank of Japan. We've got Europe doing all sorts of stuff, monetary policy statements. So could this create some kind of drop in the market? Well, you're sure as blanket can. I mean, I'm not gonna say that this is definitely gonna be the top here, but if we're gonna get a drop, this week sure does set the stage. All right, that's probably the best way I could put this. Now we may hold on till August and not drop till next week. It's entirely possible. Next week doesn't have nearly the number of red news on here. You can see as we roll down, we have the jolts and the ISM right here on Tuesday. Then on Wednesday, we don't really have much. We have a non-farm employment change, non-farm payroll type situation. And then on Thursday, again, not a whole lot. Unemployment claims, ISM, services, and then we get the average hourly earnings and non-farm employment change and unemployment rate, again, for what we saw in July, but they can't calculate that in 4 days, so it's all full of crap. All full of crap. Anyway, that's the next 2 weeks. So we got a big week and then a not so big week. That's the way it's kind of looking here. Big week with tons of stuff crammed into it, and then next week we see what the fallout is. All right, lots of earnings this week. Lots of stuff to be careful with. Be careful. You can lose money doing this game. And, I can't stress it enough. You got to be careful. All right. Please be careful. Please be careful. I keep looking for a slide that I had up and I don't see it. That's lame. Anyway. So this one I keep talking about over and over and over. When I first pulled this up, we were at 73 days. Now we are up here in 90 something days, getting close to 100. You can see the 100 right there has a jump. The further we go up this, the further percentile. This was 85th percentile. Now we're looking at 90th percentile. So 90% of the time. Oh, that was cool. I just unzoomed it. Go the other way. There we go. So 90% of the time we would have done a pullback by now in the S&P 500. Trading day, look at trading days, in between pullbacks. The average right there, 47. The median, 50% of days above and below the median at 38 days. 50% of the pullbacks happen less than 38 days. 50% happen longer than 38 days. The average, though, when you average these little guys with all these big ones, this long one, it comes out to 47 days. So if you're not familiar with the way statistics work, that's kind of how this works. All right. When you take the median is half of them are below it, half of them are above it. So 38. When you actually average the number of days, though, it comes out to 47. We're sitting at 90 something, almost 100. This means that the likelihood, I play high probability events in the market. I mean, that's kind of what I do. That's why you're here, right? I tell you what's high probability to happen. I'm trying to get back to the chat. And that's how we make money. Now, the high probability event is for us to get a pullback. Now, we could be in an outlier situation where this goes right on up and makes a new all-time high. We could see 400 trading days. That'd be like 2 years without a 3% pullback. Does that seem very likely right now? No, it doesn't. Not at all. I mean, there's all sorts of crazies out there in the world doing crazy stuff, and people doing things that I think can create drawdowns in the market. I don't think we're set up to go make a new all-time record long period of time trading days before we get a pullback. It could happen. It's entirely possible. In fact, I'm kind of surprised that we're sitting here in the 90th percentile, but the market does what can take the most amount of money from the most number of people. And we're all here to see what's moving today. So let's go ahead and get into what's crack-a-lacking on the market. What's happening? So S&P 500. I cleared all these charts before I started. S&P 500 getting a little squiggle. I mentioned yesterday morning we could see a little squiggle on up into this zone, but that could be a 618 retrace, and we could see it move on down. We don't really have a clear move up or down yet. All right, we did see a little micro bounce yesterday, and let's jump into the futures and kind of see where we're at. Now, you may be thinking, futures. I've never looked at futures before. I know some of you brand new to this. ES is the S&P 500 E-mini futures. This is when the news talks about the market being up, and you're like, well, the market's not even open yet. On the news in the mornings, or after, in the evenings, they talk about how the market's down, whatever. It's the futures, all right? They're talking about futures. ES1, exclamation point on TradingView. Most platforms, it's /ES. If you can access the futures data. This right here, just hanging out right above the 30-minute market roadmap line. So, we kind of bounced off the 1 hour, came up back to that 618 resistance. I've mentioned for a few days now, if we can get above that resistance, we're going up. So far, we have not been able to do that. All right. It's been very, very strong resistance so far. This is a sign of weakness in the market that we keep dipping and finding resistance there. And this was actually a lower high. So we're kind of losing steam on that test to try to break back above it. This can lead to the start of a bigger correction. All right, that's kind of the first initial warning. Now, right now, we would need to get below about 45.62 to indicate that we're going to go on down. Now, it's not just a spike down and pop back up. These little spikes up here, candle tails, whatever you want to call them, they don't count. All right, we need continuation. We need closes consistently below that 45.62, and it is a higher level than we had yesterday or the day before because the market roadmap line keeps climbing. All right, now if we get below it, that starts changing the tune of this whole thing, and then we would move up to the 4 hour and look at where that is, which it's way on down here. All right, 44.90. So that's going to be a significant retrace if we go test that. I mean, you may be like, JT, we haven't been down there in a long time. That's true. We have not been down there in a long time. Even in July, we didn't quite make it all the way down there. And in June, we didn't quite make it all the way down there. It has been all the way back here in May when we hit that 4 hour. That's when we were consolidating. Now, that's a ways down. Back to 44.90. Be careful, all right? That S&P, it's getting extended. We need that pullback. Now, NASDAQ, big tech. This one is looking a little more on the bearish side. Look, we're already below the 1 hour. The 4 hour is not actually that far away. It's down here at 15,383 roughly at the top and 15,300. We get below the 4 hour, we're probably going to go down and test the daily, which that's way the frick on down there, 13,756. And by the time we get down there, it may be up here around 14 something. All right, and we may go test this orange box right here. These things may all come together right up here, right out here at some point in time. Maybe into September. All right, this correction could last a couple months. That's what I'm saying. I'm sure we all love that statement I just made, that this could last out into September or longer. That would not be awesome, right? But that's what we're staring down right now, okay? Russell has found resistance at that downtrend line on the daily, turning down. I would expect probably at the minimum a 618 retrace. Let's talk about what that looks like at this point. We came down here, we held support, we rallied strongly in roughly a five-way fashion, found resistance. That would put the support for Russell. If you're unfamiliar with Russell, that's small caps, IWM, right back and down in this area, right back and down in this area, 1850-ish, down to possibly 17, We could go as low as 1750-ish. So 100-point range that we could go retest. Could hold the roadmap line. But after moving up like this, that's the high probability move. And if we held that and turned back up, that gets us set up to go way up here. So everything looking cooked, and like we might need a deeper correction. Now, can we just grind on out higher? Sure. Low probability? Sure. I mean, 10% of cases, we'll go keep on grinding higher and higher. Be careful, all right? I can't warn you enough. Now, oil has moved up above the daily roadmap line. This is set up to go higher. Get a little consolidation this morning. We're not far away from that 80.70 price. 83 above that, we may do the little classic pattern where we come up, hit that 618 level, come back, retrace, find support, and then get the extension, which arrow, there we go, up here. And possibly go test the top of that wedge pattern playing out right there. All right, so that's oil. I am long UCO. And that's how I'm playing it. GC continues to consolidate right there at the same zone that it had trouble with on the way down. It's duh. I mean, I thought it had the strength to do it. So far it hasn't. If it breaks back out of this box, we get a daily close right in here. We're probably coming down to test the roadmap line one more time. If it can get out of the top of the box above this prior consolidation, then we're probably on the way. That way takes us up to about 2,200 on the price of gold per ounce. Bitcoin finally broke down out of its consolidation. There's a few different support levels in here. First one being right here between 28.4 and 27.5. And then the roadmap line, daily roadmap line below that. So probably heading on down. We may be able to find support and turn up. May get a little intermediary bounce. We'll see what happens here. But right now that's looking like we're going to work on a correction and finding support on Bitcoin. Ethereum, its support levels are significantly lower than Bitcoin's. This one did not make a higher high right here on that effort, and is set up to go actually lower down into the 1450 up to 1550 area, right in that zone. All right, dollar continuing to grind higher. We're up in this box. Not my ideal situation here, but we'll see what happens here. As long as we don't break out above this 102 area, we're probably heading on down on the dollar. And that's a lot of green days in a row without any kind of correction. The dollar doesn't typically do that. You see, we look back through here, I need to delete that one. We don't typically get a lot of these green day without at least a doji or a red day in there. So this is unusual for the dollar. Now, CACI, stuff we can actually trade, and the market opened 5 minutes ago. Me blabbing, CACI, it was popping, now it's dropping. Just got to be careful there. Retrace back to the roadmap line would be likely, it looks like. That was a heck of an extended move. One heck of an extended move. Yeah, right up to 1618 and stopped. Imagine that. Right out to the 2618 on that move. On the peak. So don't expect much. Probably come back, retest the breakout at the minimum, if not the roadmap line, or those two things coming together on CACI. Looks something like that. And maybe come back down like that. FFIV, nice pop, but still below that resistance. beating on the top, beating on the bottom. If you hear anybody say that, I mean the top number, beating on the top, beating on the bottom, that's earnings. Top and bottom numbers, that's the two that most people look at. That's why they're on the platform. And if you're unfamiliar with that, but there's other earnings numbers that come out, like, you know, gross profits and profit margins and all that sort of stuff. And the algos trade on all that numbers, not just those top two numbers. All right. Sherwin-Williams getting a nice pop. Of course, you know, this fits with housing kind of getting a nice run. But we're coming up to resistance here. This is a big sideways, nasty consolidation that I would not be involved in, and I'm not involved in. But let's look at like lows. You know, see, we're getting a tear, probably coming up into resistance, and Home Depot also trying to break out. That's really nice, actually. The target on Home Depot, if it can get above this blue resistance zone, puts it right up here around 367. Earnings aren't for a couple weeks yet. PKX, that one just keeps showing up and is freaking crazy. It's going to come back to earth more than likely. That it looks like it's highly illiquid too. You know, only been trading about 725,000 shares. I like stuff over 1 million shares. It's more liquid and produces better charts. In XPI semiconductor, so this was a measured bounce setup. And the target is right up here around 260. Now you see me using the fib tools a couple different ways, and I use them based on what the pattern is that's on the chart. All right, in case you're like, wait a minute, he just used the fibs totally different than he did a minute ago. Just letting you know. LOGI, Logitech. Nice potential move here. Let's see. First resistance at 72, then next resistance at 78 above that. So there you go. That's the swing. That's the resistance, and then that's the, you know, targets, if you will. It's been quite volatile with lots of gaps, so I would be cautious here because it looks like we've got a swing right over here that's going to provide some resistance getting through. DDOG. There's the resistance. I mean, if we can get above it, we can go bullish, but we may turn down there and retrace back. GE continues to be a monster. At some point, this is going to give it up and retrace to the roadmap line. Then we could potentially take an entry on a reversal off of that. But right now, book your profits if you get them, because this is going full crazy bullish move up here after almost going out of business. They lost tons of money and we're looking pretty bad, but now beating on the top, not so much on the bottom, but still getting a rocking move up. BIIB, also, this is a biotech, and I have to caution on biotechs, they can be dangerous. All right, be careful. We can, biotechs don't always follow my patterns. There's 4 things that don't, you know, China, cheap stuff under $10. Biotechs, leverage stuff. Be careful. ZS, you know, biotechs include pharmaceuticals and medical specialty and all that stuff, because if the FDA, you know, it's a game of who's got the bigger whatever. The FDA can just say, nope, your drug sucks, and their stock price goes down. Or, hey, our drug got approved, and or, you know, medical device or any of that stuff. So be careful on biotech. ZS, that's significant resistance right in this area. We could see a pop right up to the top of the range, but be careful, please. That's not an overly bullish chart coming off the lowest low there. No real measurable correction. I don't really have a lot to do the projections off of. FNGU, this one's leverage. Remember, I just said about leverage. Be careful. That was being crazy and may come back to the roadmap line. ALB. That's just a sideways gnarly and may go lower. It's holding the roadmap line on the daily. That can go lower. I don't care how much percent it's up today. 3%. It can go down in a blaze of glory. Meta reporting earnings on Wednesday. Right up just shy of the 320 gap fill. Get a pullback similar to Netflix. It may mean we need to retrace the bottom of the box before we can get back all the way to the top. MMM, 3M, still bearish. That's been a dumpster fire of a pattern for going continuation lower. Is this a reversal yet? I wouldn't bet on it until we get above the roadmap line on the daily. Tesla, this one can retrace mega size. All right, this can go back. There's potential. There is potential for this to go back to 150. This 145, 150 area. It's potential on the chart. It's there. Now, more likely, we go revisit this area where we have a support zone right around 210 to 220-ish. And at the minimum, we could see 250. Watch out. Watch out, watch out. If we get below and stay below this trend line, this downtrend line that we, worked on for almost 2 years, if we get back below that, we're going to retrace more deeply. Be careful. That was a giant freaking move up. It was, so far, it's 3 waves. And be careful. All right. Tesla can move like a monster. If we get an outsized correction in the market, it's going to come back. AURC, this one popping like crazy. Must be a SPAC acquisition. And the pattern for SPACs is, unless it is a legit, straight up, honest deal, like it's probably going to come back near this SPAC price back down here. Don't know anything about AURC. Don't care at this point. It's not something I'm looking to trade. Baidu, working on finishing up this head and shoulders pattern. If it can actually finish this sucker up, we could see a bigger move out of Baidu. It's getting there, right near the neckline. The target on that is the head to the neckline right there. So off of wherever it breaks out here, potentially would be up here around 350. If it rejects, the failure pattern goes down and we can go right back down to the lows. So that's a wide margin right there on Baidu. We do have significant resistance that we've held all the way across here. So just playing in between the support and the resistance right there is where I expect it to stay. That's why there's a big sideways arrow, and I just kind of expect it to keep staying that way. That head and shoulders is potentially there, but is it going to play out? I don't know. All right, almost down to the end of the list here. Rio, choppy, gnarly. I don't know. Potential measured bounce setup. Potential at this point. If it breaks down below the support, we could go lower. The measured bounce target would put it right up in this $100 area, right up in here. Target, there we go. Right up in here. Could see it do that. I'll be cautious until we're back above this $75 area right here where we consolidated on the way down. YINN. China Bull 3X, still below the roadmap line. That's still bearish, and we can still go lower. The Yang, what was it? Yang, Yin in the, is it Yang? Yeah. This one right here, oddly enough, the 3X bear is not popping either. So Yin and the Yang both looking sucky. So I'd be careful. And that's popping 6% on the day, but it's still looking bearish, and the Yang looking bearish. That's not overall good for China continuation. This is kind of setting up as a potential head and shoulders on Unilever. I would be careful. If we turn back down here, that can go lower. If we can break out above the head, that could get continuation higher. That was just what jumped out at me immediately. If we stay right above here and break on out, 57, 59 on the next move, That would be good. Kind of eliminate this head and shoulders, but that pattern's there, and that would be a pattern for going back down into this zone. TMO. Nice choppy sideways. My medical specialty falls in the category biotech for me. Resistance up there, support down here. Nothing not a chart I'm interested in. DHR, nice move up. If it can hold above the roadmap line, that's positive. Came up just shy of the target. Looks like we've got the retrace in one big candle. The extension out 268, 273 before the next retrace that I would expect. Spot, look at that. Coming right back to the roadmap line. We'll see if it can hold support at the roadmap line or if it goes on down to where these prior highs were. So at this point, that's the support. CDNS looks like it wants to retrace to the roadmap line also. If it can hold in here and turn higher, that's good for higher prices, but that looks like it's going to roll on over and come down here at some point. All right, bias for the day. Super cautious. We're kind of flat so far today. Lots of economic news. Please be careful. Kind of got the parameters here. I just set an alert, I think. As long as we're under this resistance, as long as we're under, say, 45.95 on the ES, bias is still down. Now, if we can get some closes, some hourly closes, 30-minute closes, it'll be 15-minute closes first above 45.95. We start turning the tide toward going higher and getting the extensions. Where are those extensions? Let's zoom it up and look. 46.22, 46.40 on ES. That's the futures. They do run a little bit different price, running about 25 points higher than the S&P right now. So knock about 25 points off. That would be like 4,600 and 4,600 right there. Confluence of numbers. Be careful. All right. I will be live at 5 o'clock this evening. Make sure you're subscribed and hit the alerts so you get notified when I do that. I'm going to take your requests for 30 minutes. I do this every Tuesday at 5 p.m. So come watch me. We'll talk more about the market, more about what's happening, more about Google and Microsoft earnings, Visa, all those other ones that are hitting. If they're moving, we'll talk about them. And otherwise, I'll be in Discord. Links in the description if you want to come hang out with me in Discord and get other updates all day long. Have a great day. Remember, the account you save may be your own.